Hey guys, this is Elliot WaveSage. Let's do a quick update for the market. And like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So bigger picture SPY at the moment, we have a five-wave move down in a B, and a C for a W, a higher degree. And then you have three waves up for W, and then three waves down for X. And now we're finishing the final move higher in Y. I believe here, if we could take a look, let's go to the daily. As you could see from a cycle standpoint, the cycle from the October lows is not done. You see that, but the cycle from the March 15th low or early March low does look like it has been reset in that sell-off. As you can see here, it's been reset, and I do believe the question is, are we still in this X wave or not? And how far can it go before it negates this view? Well, it has a lot. It could still, the market could still drop more, but obviously once it breaks this RSI cycle here, then the top is in, but it hasn't done that. So there's still more room for this to drop. So what I'm saying here is the market, could do something screwy, still be an X, and maybe I could put W, here, A, B, and do a 1 and 2, and then come back up in Y, and then crash. You see, so it's a very treacherous market, very confusing. Imagine if you're a trader and all of a sudden we drop again. You're going to go, oh, this is the crash, but it might not be the crash if the RSI can stay supported here. Yes, this would crash, but if it could bounce here and here again, we would not end the connector. It will bounce to new highs and fool a lot of bears. So we got to keep an open mind if this were to take another dump to maybe there's an opportunity in the market on the long side, keeping an eye on that RSI and other sectors. So you can't just FOMO in on the short side if this were to take a spill. Now we're only up 3 here. We need a pullback in 4, and we need 5. It looks like we're getting a little bit of that pullback here in 4. Now this pullback may not give us a 5. Like I said, this X may not be done here, right? This X may not be done here. Okay, so if it's not finished, well, what does that mean, right? What does that mean if it's not finished here? Well, then it's 3, 3, 3, and we'll come back down here in 3 waves, and then I would put instead of W, I would change this to an A, B, C. So where is the next area of interest on the long side right now? If you dare want to take it, the next area of interest on the long side would be 400, 396. This area here. Maybe as low as 391, but around here. So that's the area to play a bounce out to finish Y or maybe C. Now, if this X is done and this W, is here, and we have like a triangle, like I was trying to show here, where the W's here, where it's like an A, B, C, D, E, where it's something like this, a real messy structure, something like that. Then it could be done in this it looks like almost like some kind of megaphone continuation pattern of some kind, right? For your X wave. And that's what X and B waves do. They can do this kind of sideways crap, and then it comes out. So if this is the case, then we need 5. If this is the count, if we're not going to do this drop, and I'll keep this here just so a reminder in case the market does take a massive dump, the more probable count is a 3, a 4, and a 5, a pullback, and then a C. Something like that. So day traders, you could expect maybe a pullback, a marginal high, and then a healthy sell-off again. Here, a healthy sell-off that theoretically could go back and even fill the gap at 406, but a healthy sell-off only to have another rip higher for the final move, for the final swing. So I don't know how it's going to play out. This is just one path in the SPY and the indices, but we're on borrowed time. You know, the time's running out. Like I said, now if we were to just drop to 400, then you could put A here, B here, and then C. And then the question is, well, could it be done at this point? Well, you have a lot of divergence, and you haven't broke this high. So if that's the case, I would call this WXY. I would put the actual X here, and I would call this a 1, 2, and then you'll get a 3 of 3 move. So, but very ugly, right? I mean, if that's the case, this looks like 3 waves down. You would have to ignore that and call it some kind of like 1, 2, 3, 4, 5, and then you would have to call again this some kind of 3-wave counter trend move up. It's very ugly. I would have to force it. It's very unlikely that could be the count. So that's why the market is showing that it wants higher prices and then a massive crash, or we crash and then we get a rip out of here, and then we go, and then this will be a healthy sell-off out. So that's what I'm looking at. This could be the dollar higher, the dollar new lows, and then this could be just the dollar makes new lows. And what do I mean by that? Well, the dollar is what's the king right now in the market, dictating everything. So if the dollar decides to take a dump here, and finish this move I have shown here, WX, ABC, then you get the scenario that I'm showing here, where you just get this 5 pullback and B up, and then we're done. This would be the dollar making new lows, and then this would be finishing it up. The other option where it's crash and then bounce to new highs and then crash again, a deeper one, would be where we're still in B in the dollar here, or worst case, we're still in X, and this is an A, B, C. X comes up, the dollar comes back up, we go down to 392 SPY, and then then the dollar drops in Y, and then you get new highs, and then you get the crash. And like I said, that's my thinking at the moment. I don't see at the moment, though, just a straight down crash. It's possible, of course, nothing's impossible, but it's hard to see it because this doesn't look like 5 waves down, right? No divergence, and this doesn't look like 3 up here. This couldn't be a 1, 2. And this can't even be 5 swings because we haven't broke this high yet. So to me, this is not a 1, 2, 1, 2. This is what it is. So I don't think the market's ready to crash just yet. But is it coming? Oh yeah, it's coming. Now, when this Y ends in 3. Then when it makes a new high, then it's all she wrote for this market. Another clue to be looking for is this RSI coming up and taking out that peak. Up, take out that peak. That'll be another clue we're close to the end of the move. And that would be this move here from here to here. So a lot of tough trading ahead of us in this situation. And like I said, if we were to just sell off and crash, yes, it would come down to this 390 area, more than likely 400, but most likely 390s. But you have to be careful. The market could be supported for another rally higher and then crash later in the summer. Okay? But the clue to know if that is going to happen when we're down there, when you're down at 390, would be if this breaks. If we're at 390 and this is down here, then the top is in. Then I have to relook this count. If we're here or above this trend line at 390, you need to be careful for another bounce like you saw here. Let's look at the weekly RSI. It's the same idea. As long as the weekly is above this trend line here, actually technically here, there we go, that trend line, the cycle isn't over. Once the weekly breaks this, then the connector is finished, and then I would never be in any long position anymore in this market. No buy in the dip. Buy in the dip has to come out of your brain cells at that point. You have to get rid of that thinking, sell the rip when that weekly RSI and daily break. Until then, it's a tradable market. It's both sides. Play both sides. Go in and out. Find things that show setups. Get in, take your money, and leave the market like I did on Friday. In and out. And just take advantage of this chop and this volatility. And then, but eventually it'll trend again. The market's going to trend again. Then technologies. Let's take a look at technology sector. Again, W, X, Y, X, Z, W, X, Y, and now you have an A, and the B hit on Friday, and now we have C, and now you have C, and you have almost made 5 waves. So this move in technology could end at any moment, so be careful with that now that the number of swings are in, right? But again, if you look at this, it looks like we're still in the C wave. No divergence. This looks like almost another 1-2. So this is still seems like it wants to grind higher. Technology doesn't look done quite yet. It's got more. Looks like more upside coming before it's finished. And if, let's say, we were to pull back deeper, then it could become a 1-2, 1-2, and a 3-3 out of here. So what, again, RSI wise, I want to see out of this. Here you have all this massive divergence. I want to see a lot of that get erased. So we should be squeezing more in technology out of this, and we're starting to get that, I think, as of yesterday, as of Friday's action. That's what I'm looking at. So that's what I look like in tech. Now, technically, it could end since we made a new high. It could end and crash from here. It would be a surprise. But unlike the SPY, I can make that work with the swings and the count that I'm showing. Let's look at some cycles. So the daily cycle hasn't ended yet here. We're still in it. When that breaks, then we know the connector's done in tech. Until then, the market could still pull back and still be supported for even higher prices. As you could see within this cycle has been corrected here. So this cycle's been corrected here already. If we were to go lower, it would be a new cycle down, and it looks like that A and B has been already corrected too. So odds are technology is getting close to ending. and it does show a little more upside, and that should be it. Now, and that should be it. Maybe it could be extreme, get to 330s at the extreme, QQQ 330s. We'll have to wait and see what happens. If we just crash from here, then the top's in. So just keep that in mind. This is coming to an end. This whole move. Okay, so I spent a lot of time on that, and then the Bitcoin is again in a it's not a tradable area. If we drop to 25.2, I do like to play that bounce. If the dollar hasn't capitulated yet, if this drops and the dollar has not made this move lower, I'll buy Bitcoin on a trade. If the dollar is down here and Bitcoin is trading at 25.2, I won't touch it, because eventually the dollar should bounce out of this, and when it does, Bitcoin most likely will sell off. And the 10-year looks like it wants to break down. Could be risk off here, although it could be a great thing for technology. It's tough to say how it's going to trade, the correlations, but typically those rates have gone down, tech has gone up, so this could be that final top in technology here. If we do break higher, then there's a chance the 4 got done here. So keep an eye on that at the moment. But I do think it's going to go lower. And the 2-year looks like it wants to break down, and every time it breaks down, banks fail. Every time this makes a move down, banks are failing. And so is that showing me a bank's going to fail? The other option is we're still in B, and we make another move higher, supporting the market again. So I don't know where that will end up. So it's tough to say at the moment for the 2-year. Then gold and silver, I gave you a warning. You're in this 5th wave, and gold even could be done right now, but looks like 1, 2, 3, 4, maybe one more high in gold, and that's it. Silver again is in this 5th wave. 1, 2 could make it to 27, and then that should be it. And again, when the dollar starts strengthening, these are going to sell off, and that's why I have these counts. So I updated my silver. I think it's a WXY here. The reason for it is divergence off the low. So I think this bottom won't hold, and it makes sense if the indices are going to crash to 300 and the dollar's going to rise dramatically. This should happen in silver. And then gold, I do believe, is going to top at 1 and pull back into, can't really say how deep it will go, but it should correct the move from 2015, 1, 2, 3, 4, 5, and that's gonna hurt a lot of FOMO buying in gold, but that's what the market does. It hurts people. Is what it's gonna do. So that's how I look at the precious metal sector at the moment. So yeah, there's a risk off move coming across the market where only you're gonna want to be in cash or short. That's it, or maybe short bonds if rates start going higher. But I do think this move is coming to an end, and when it does, all hell will break loose, March 2020 style, and this will be the panic wave. This will be the wave that everyone's going to be screaming at each other, yelling on TV, and this is what will happen. The question is when, and what could do it. Again, a lot of people feel the debt, ceiling, if it's breached, where they have to stop paying their bills, causes panic. I actually think it may not cause as much panic as we realize, unless there's an unintended consequence. It does seem like no one's motivated to negotiate, that they're going to actually let the default happen to cause the pressure to negotiate, because the market's not even selling off. See, in 2011, it sold off ahead, and that market sell-off scared people into negotiations. Right now we don't have that. The market's so blissfully like complacent, it will take an actual default. Then it's like, oh, now we need to negotiate as the market goes into, hey, can go hectic. But I don't know if this catastrophe, unless I read somewhere that certain obligations must be paid by law, and as they get challenged by courts, which would already happen, there may not be enough money left over to pay the bondholder, right? Because we will choose to pay the bondholder above all costs. God will make sure everyone starves, right, in the country before we let the bondholders not get their coupon. That's how the system's more than likely set up. But the question is that legal in that kind of priority? Who can determine the priority of who gets paid? My guess is, what if a court steps in and goes, oh, no, no, you have to pay Social Security first. You have to pay this first. You have to pay that. No, the bondholders took the risk, and they're the one that need to hold the bag, and it very easily, could surprise people. And then if that were to happen, then you would have a calamity in the markets like we've never seen. It would be probably like 1929 massive bank failures, because then all the government bonds actually have risk. The CDSs will get fired and triggered off. Trillions of CDSs will come due. It will be a massive calamity of biblical proportions in the market. In fact, I don't even know if they would be able to open the market in that environment until they fix the problem. It would be so detrimental. But that's what would have to happen. You would have to have an actual hard default, bonds not getting paid, and maybe the only way that happens is if the court system steps in and forces the government to prioritize them last and not first. So that's going to be interesting to see how that plays out when that event happens. And I do think it's likely. I do think it seems like both sides want that breach to, because each one thinks the other can be blamed. And Yellen thinks she can blame the government. The government thinks they can blame Powell. The Republicans think they can blame the Democrats. So everybody feels like they can blame someone else. Powell thinks he could probably blame, Congress, and so there's no one accountable to make it work out. And there's no market pressure at the moment as the time ticks on. So that's my take on the debt ceiling, and yeah, I mean, is going to be that I think they'll have to find out how they prioritize the payments, and I imagine the initial priority by Yellen would be bondholders first above everything else, for the sake of the financial system. And if like I said, if that were to be forced or changed, then yeah, calamity. It'd be an absolute catastrophe. Rates would go, skyrocket, debt downgrades, mark to market, write downs. So it'd be just an insane crisis if that happened. So we don't know. We're in uncharted territory. So then, just looking at some setups, let's see if there's any good setups. A lot of things bounced already, so a lot of setups are lost, need to be reloaded at the moment. I just don't like really any of these setups on the long. There's really no bounce play. Short play would be financials. So what can be shorted? What's a good short? Let's look at Schwab. Schwab looks like we're about to have a breakdown of this, triangle look, whatever you want to call that, and perhaps a short area for Schwab. If it happens to give you this bounce, would be somewhere around 53, a retest of that downtrend line right here. So keep an eye on that. 53, if it were to bounce there. Right now, I wouldn't really mess with it. Looking at Western Alliance, we had 3 waves, just missed a short area, pulling back. So a short against 28.93 would be good, but I would stop out there. And you could become 5 waves up. If it becomes 5 up, then it's going to be a bigger correction. So we'll wait and see. Pack W shows 3 up. Again, is it going to form 5 up and then a bigger corrective bounce? Looking at Capital One, looks like a 1, 2, 3, 4. Looks like it needs a 5 and another move higher. Although it could also be a 1, 2, 1, 2 and get a crash. Don't know yet. People are already like, ooh, buy the dip in the KRE. I wouldn't mess with the KRE until it hits 20 bucks, or $20 to $14. Still got a lot more downside to go, but it won't be a straight line down. So that's where I'm looking at the KRE, finding the bottom somewhere around here. And there's probably a lot of others, but anyway, so that's my video for today. I would expect the market to be choppy. I would expect, sideways action to lower, and then another pump, and that should be it. Maybe, again, just let's speculate. Perhaps this is a sell-off into CPI. CPI comes out better than expected. You get a massive pump. Oh, there's going to be a pause. It's great. It's awesome. And then, oh shit, we breached the debt ceiling. Damn. And then a massive risk off as Congress can't get his shit together. That's what maybe now I'm seeing set up. It seems like the setup now, if we trade up here into CPI, well, that's pretty obvious what's going to happen there. So I think that's the setup right now. It seems like we trade low into CPI, and then CPI is euphoric, and then some point later toward the end of the month, debt ceiling's breached, maybe an accidental breach. We wake up one morning on news, it's like, oh, X date came and went, we miscalculated, or the revenue coming in was lighter than we projected, and then all hell will break loose as they try to figure out who gets priority payments and rating downgrades and so on and so on. All right, guys, that's all I've got. Good luck trading.